Hello, traders. It is 8:03 a.m. Chicago time on Monday, the 14th of December, 2020, the last full trading week of the year. Please let me know if you are having issues. Looks like YouTube's reporting an issue of playback here. I'm going to give you a moment here to verify if you're hearing me. Hopefully you are. I'm not sure what the issue is. Looks like we're good now. Okay. Thanks for joining me today. This is episode number 1898, almost at 1900. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is pushing higher on a pop for the vaccine beginning to be delivered around the United States. U.S. vaccine campaign launches with first shipments delivering hope to millions. Cargo planes and trucks with the first U.S. shipments of coronavirus vaccine fanned out from FedEx and UPS hubs in Tennessee and Kentucky on Sunday en route to distribution points around the country, launching an immunization project of unprecedented scope and complexity. In addition to that, the Congress is now, which is normally in a lame duck session here, Congress is in a sprint to fund the government and approved COVID-19 emergency aid that's expected this week. The federal government's budget priorities and coronavirus aid are expected to total over $2 trillion, which is the money that is now on debate and is at stake. So that's where we are. The market is in a euphoric mode this morning. Here's the convergenttrading.com summary sheet for the day. You can see allocation is clearly to the indices, to risk on sentiment this morning. S&P popping higher, 24.75 points at the time of this prep. It is a little bit lower since, I believe. The Dow's up 237, NASDAQ 52.25. The Russell, big time, 22 points. That's a lot for the Russell. The Euro up 36 points and the DAX up 155. Crude also popping higher. The world is expecting things to go back to normal soon or over the next few months. The caveat, of course, here in the U.S. is this government shutdown, which is very potentially going to take place. Gold is off, $13, and you can see money's being pulled out of the metals. I expected copper to be higher today, but it's off very, very little. And the notes, as we would expect, and the Bund would be off today as well. In terms of the overnight, the overnight session. Let me see now. This number keeps increasing, of course. 145,000 traded, a little bit lower than what we would expect for the overnight session, or what we would expect to be common and normal. 17.75 points so far. The inventory overnight's 100% long and a gap up. 100% inventory, and the overall profile overnight, although it popped higher, is somewhat balanced. The rotations to the right, the gray box to the right, the rotations have been updated. They get updated once a week. Important to note what your product rotation is. The description, let me get a whiteboard going here. Whiteboard, where are you? There we are. The description of how these rotations are done is down here. They're 1 minute bars, 20 session look back period, which is about a month on a 5-bar fractal. This is what you would expect to be normal rotations, or the noise, or the harmonic for these products. I know these numbers don't seem all that important, but they are, especially the rotation numbers. This can help determine your stop size and your targets to put you out of the noise on that time frame. So these numbers represent one standard deviation from the mode, basically. One standard deviation and they tell you what is normal in those products. Okay, and then the range, the daily range, is right here. 58 points in the ES is the current stat. These are statistical numbers going back 252 days. Again, past performance is not necessarily indicative of future results. While we're here and running a summary, this is the pace of the roll. I posted this on my Twitter feed. Pace of the roll is at 50%. It reads 40% there, but you can see the roll ends at about 80% of the open interest rolling. This is from the exchange, and you can see the bands, the ribbons of what is above and below average, or the limits. But in general, about 80% of the volume in the ES rolls, and we're at 40% of that volume, so we are basically 50% done with the roll. I'm expecting by Wednesday that we would likely be up here somewhere and pretty much done. What does this mean for us? It means that we can go back and pay attention to our deltas and pay attention, go back to basically normal trading as the roll is pretty much done. Now on to the review segment. Scenario 1 on Friday. Scenario 1 on Friday was expecting a dip below Thursday's low, expected the market to drop, find support, and then impulse up and push to the highs. The extreme on the highs was on scenario 3 at 59 and a quarter, and the extreme on the lows was expected to be somewhere around 36.30. Expected a double distribution profile on Friday. That was the anticipated key trade or key endpoint of the day. Here's what actually happened. This is on a 4-tick Renko. You can see the market opened in a clear open auction in range in value. Test down, comes back to mid right there. We did not quite get an extension. It dropped a little bit lower, but it really couldn't push below the prior. It couldn't push below as we would have expected to, and then it tests 51.50, and then later on it decides to come back and push down to 24 and a half. 23 being a key figure down here. 23 is pretty big in this area, and then it squeezes back up and gets almost to the 59 and a quarter. So what's happened here is scenario 1 played out in a very difficult way, but also it extended much farther below and above. It's hard to, with the range compressing and with the volatility dropping, it's really hard to estimate ranges these days. But overall, Friday had some pretty big moves, some news-based moves, but like right here, it's just really pushing and then chop into the close. So we did mess around with the prior day's low right here. We poked through the low mid, and I really expected this to push down into that 30, consolidate, and come back with an impulse. That's what I was looking for. The prior day's low is green. This profile here represents the current day. This is this day's profile. I know it looks confusing because it's overlaying the prior day, but if I extend out like this, you can see that it's matching the current profile. We ended up with a double distribution profile, but it was a funky looking one. Overall, the plan played out somewhat as expected, with the ranges extending a little bit farther out. I did not take interest in any of this action over here on Friday. So that's that. Overall, on Friday, we did finish with a delta that was flat, but again, it's Friday, it's rollover. You should be trading March, by the way. The volumes in March now, you should have rolled, even if you didn't roll on the official rollover day, which is Thursday, or the day after, Friday. you should be on March at this point. There's no point staying in the December 2020 contract. So you should be trading H1 or H21 at this point. And that's what these charts represent. I'm looking at the March contract, and again, we cannot rely on the delta and any of these volume figures just yet. This is why keeping track of the pace of the roll is important. Here's what's happened overnight. So we finish up pretty decently strong. The point of control at the top of the range on Friday. We took back basically most of the sell-off in the overnight session, with this 59 key area holding the buyers into the close on Friday, and then we gap open up here on Sunday night and consolidate through the Asian session, and then we pull back a little bit on the European Open, and then since then we've pushed higher. There's not much to talk about in terms of the calendar overnight. Some numbers out of Germany, Eurozone industrial production, the RBA meeting minutes out of Australia, the MBS press conference is tonight. From China, fixed asset investments from China, industrial production, retail sales, and unemployment rate, all from China at 8 p.m. Eastern, 8 p.m. Central, 9 p.m. Eastern, as the convergent summary sheet shows. To review the rest of the week, and what is key, tomorrow Great Britain gets claimant count at the open at 2 a.m. Eastern, expecting 30,000. Other than that, we do get some U.S. numbers here and there. They're not considered high-tier numbers throughout the day tomorrow. API crude oil stock change at 4:30. Balance of trade out of Japan at 6:50 tomorrow night. Wednesday, we get the inflation rate out of Great Britain at 2 a.m. on the open. We get retail sales out of the U.S. at 8:30 on Wednesday. We get the market manufacturing PMI, flash, and a few other numbers, crude oil inventories, and the Fed rate decision. It says, I'm not sure about what that's going to look like. Thursday, not much. Inflation rate out of Japan in the evening. These, I'm just looking at high tier releases. And then Friday, IFO business climate out of Germany. That's an important one. So the week has a lot on the calendar, but nothing really dramatic. There's not much that's expected out of the Fed on Wednesday. So it's not really considering it a huge deal. Currently, we're trading up against the single print left behind from way back here, the 9th, and we are taking back a lot of the selling that's happened. So let's move to the daily to get a quick overview of what the story is overall. Actually, let's kill this. Boop. To get the story. Here's what's happened here. This is important for you to stay in context of what the market is doing. There's the establishment of one-time framing up on the weekly, continuation of one-time framing up, further continuation, further continuation, further continuation, and further continuation. These are higher lows on the weekly time frame. This is bullish behavior on that time frame, on the higher time frame. However, last week we put in an all-time high in the new contract, 3702.25, and have established one-time framing down. We broke the one-time framing up over here on that new all-time high day. We broke the one-time framing up on the daily, and we started to establish one-time framing down. So the trend on a daily is down, trend on a weekly is up. Today, we have broken the high of Friday, and so that one-time framing down is off. And so the expectation is we continue to rotate, and then the goal is that point of control, the weekly point of control up there. We had 59.25 last week. Remember, this is where the high was basically on Friday. Got to, I believe, 57. 75.58 against the 59 point of control. And then last week we established a point of control up higher at 85.75, and that's what we need to watch out for this morning. That is the target for this morning. The overnight high was 85 against the 85.75 point of control. So we are at the upper end of the range. The 3,700 is threatened now, and is likely to continue to squeeze through. Okay, so even though we're gapping up, we are actually inside of last week's range, inside of Monday, Tuesday, and Wednesday's ranges. This kind of megaphone formation. We are back in here, so we are gapping up, but we are actually in balance with last week's major action. The one-time framing up on the weekly is intact, and now we are reestablishing one-time framing up on the daily. And what this means is we are likely to continue higher. Let's take a look at what's expected for today in our current segment. Let me just set up the chart. So what are we expecting up here? Boop, current. By the way, I was going to show Bookmap, but really there isn't much to show. That the 30. Well, let me show you Bookmap for a second. 36.85. Strong liquidity up there, holding steady. The liquidity was held up pretty well overnight. You could see that the market kind of walked through some decent areas of liquidity here, and then it got to the 36.85, bumped its head against it a couple times. It clearly was reloading here. You could see that the color did not drop at all, did not shift towards yellow and white at all as the second test occurred, and then immediately we had impulsive selling down right here, and we've been holding steady. So if I extend out, you're looking at the full depth. If I extend out, we don't really see very much above and below in terms of in terms of bright areas. The next area up is 95. We have some at 87.50, the 95, and then below we're looking at 68. Really, there's really not much we can glean from the order flow at this moment, but we do know that we had a pretty good test of 85, and I'm looking for a stop run if we take the overnight high out. It's poised to do that. Here's the overnight point of control down here. There's the mid and VWAP for the full session. They're on top of each other, 73 versus 76 right here, 76, 77, 73. We have tested the 77.75, which is a long-standing stock zone. We've tested it from below right here. This stock zone held from below. It broke through, and it's holding from above. So resistance becoming support. As long as this area here, and these look like pin bars, as long as this holds, the 77, 75, 78 area holds, I'm expecting it to squeeze, which is the key test. So with 100% inventory, it might push down into the 77, 76 area, but I'm looking for an impulse higher back to the 85, and I'm looking for it to squeeze into the 88 and start working itself towards that 3,700 again. 91.50s in play. It is Monday, so I don't have high expectations in terms of range, but I'm looking for a pullback to balance some of the overnight inventory. Let me just clear my throat. I'm looking for a pullback to balance the inventory this morning with 77 and potentially 76 holding. These areas holding, and then I'm looking for it to push the 85 and squeeze through the, chop around in the 88 right here and squeeze into the 91, and I expect that to be the extent of it. The secondary The secondary, an open auction out of range that tests, starts to squeeze higher, pushes through the 85, gets into 88, which has multiple confluences there, and is unable, gives us an impulse back down towards the open, consolidate, and then start to squeeze lower towards the overnight point of control before it bounces back up and we hold steady. I'm expecting this. I'm expecting the gap zone to remain open down here. I'm not expecting this to be a gap fill. There's really no news that hasn't been uh, uh, factored in just yet to cause sellers to panic. I'm expecting shorts to continue to get squeezed. I'm looking for it to push higher. The tertiary, or the third scenario, is an open test up, drive down. That's a pretty low probability play for today, but it's out there. That's all I have for you. Again, today, this week is the last full week of trading. We're expecting things to slow down, and it's expiration week. So mind your risk as always, and just pick your spots as you trade today. Good luck, and I'll catch you tomorrow morning. Take care.